So what we're going to do today is we're going to go over a trade that I took on USDJPY last week. Pretty much just going to examine exactly how I went from the higher time frame all the way down to the lower time frame entry and why I transitioned through the time frames. Again, highlighting the fact that I am layering positions. I am not just going straight down to the lower time frame. I'm building a thesis from the higher time frame all the way down to the lower time frame. So starting off from the weekly, as we can see on the higher time frame. So dollar yen, what have we done? Well, on the weekly we can see that price has come down all the way down to these lows, right? Previously we were selling off. Let me go on the weekly and show you guys exactly what range we're looking at. So price previously tagged this area. At this point we were looking for the shorts. However, as we came back down to these lows, we wanted to see how does price react for a temporary pullback, potentially up into these sorts of areas. Well, my first sign was that we left the bullish wick, right, this bullish wick, and then price correctively came back down and filled this area. Now with the previous weekly close, we can see that is a very bearish weekly. That's not a small little rejection, no, that's a very bearish rejection. As we can see, it's actually retraced the previous candle around about 50%, and it's retraced this candle. So I can see now that bullish sentiment is starting to come into the market. However, I need to go down to the lower time frames to see a more precise area of how am I really going to enter in this position. So I go down to the daily and I can see the structure a bit more clear. I can see that this is clearly corrective nature. If this was going to go short from here, would it really be correcting all the way into here as it fills this near miss? Most likely not. Usually you'd see an aggressive pull, so after this pullback here, you'd see an aggressive sell-off down to here, not as slow as a corrective move. So what I'm looking at here now is, okay, this potentially coming back up into these sorts of areas. Now, going down to the 4 hour, what can I see? Well, I can see that we're starting to build a bit of structure. Now, if we look in between the lines, I'm going to flip the charts here. If we look in between the lines, we can see that structure is starting to form leading up into this area. So this is not just a squeeze. We can see price has come up with a 1, 2, 3. Then it tags this area. Does it commit? No, it doesn't, because it needs more liquidity. So what does it do? It gravitates towards this value area right here. Again, we form another 1, 2, 3 as an extension of this pattern. Now, that adds more confluence to this overall reversal pattern, because it's showing us now that we're slowing down even more after that third touch. So I'm now instantly looking to target this range. However, I'm also not ignorant to the fact that we are sitting at a major inflection point right here that could give us a sign that we're going short again. Now I'm going to flip the charts again, and then we have to ask ourselves, how has price started moving up to the upside from here? Well, we can see correction into correction, right? And another correction. So this is relatively a pretty corrective leg for something that would be impulsive to the upside. For it to be bullish, we'd want to see a bit more of a strong commitment. You wouldn't see a larger correction into a larger correction. So we're a bit more cautious with what we're looking for. We're not just rushing into any sort of position. Now, I'm asking myself at this point, how is price reacting to this area, and what do I want to see happen? So as I let price play, we start forming this structure. Now, at this point here, we have a clear line in the sand. We know that if price is going to go short from here, after it's formed this double top, it's likely to form a developed structure here to allow us to play that all the way back down into that double bottom there. However, what did price do instead? Price formed this 3 touch, and then we got a change of sentiment on the 1 hour, right? That strong change of sentiment on the 1 hour. Now all we need to do is look for lower time frame confirmation on around about the 15 minute. But first I want to see it develop on the 1 hour first. So start seeing it stall on the 1 hour. As you can see, okay, I can see price is starting to pause on the 1 hour. I drop down to the 15 minute and I just wait for this flag here to develop enough for me to place a reducer risk entry. Now at this point, right here, I can clearly outline the consolidation. So what I do is I then place my entry just above, and that is the trade thesis. Now we're going to get into the management, but I want you guys to understand exactly how I went from the higher time frame all the way back down to the lower time frame and catered my entry to that specific reason. There's a reason for everything that I did just there. So now we're going to go into the management, and I'm going to show you guys exactly how I planned this. So I knew I was going to move to break even. So at this point here, we've got this push up continuation. Now I'm aware that this flag here is pretty steep, so that could have a potential of coming back into this area and forming a 1, 2, 3 for it to start selling off again. So I know that around about this area here is when I want to move to break even if it gets to that point. So price moves, comes up to around about this hook point here, and that would be floating around about 1.4%. I move to break even. Now I stay on the 1 hour. See price is starting to commit, not locking in profit yet. After that candle there, I go down to the 15-minute and I see, okay, we've moved far enough away for me to at least lock in around about 1% there. And again, we get this strong push out. I go down to the 15-minute and I can see, okay, we've got our next low right there. Move it to there. And I want to preface that I'm not looking to hold this for too long. I'm at this point just playing this range because it's more than enough risk to reward for around about 5 to 1, 5.7 to 1. So when I'm trading funded capital, I'm not looking for these home run trades. I'm looking for the incremental growth, the sustainable growth that's going to allow my account to grow consistently. So bearing that in mind, in the next step, you'll realize exactly why I'm saying that and exactly why I managed it the way that I did. So with this position, as you can see, I had my stop around about here, and I'm already getting aware that we've had this 15-minute flag and we've moved very far away without any pullback. So I'm aware that any rejections here, I want to be very aggressive. Now, my take profit at this point was around about 90% of this range, but as you can see, price has got to around about here anyway. Now, I see price starting to reject here, so I use discretion, right? I use intuition, and I manual close it. I manual close it because we're literally 0.3% away, right? So I'm not gonna risk that now pulling back and coming down all the way back down to where my stop loss was, which was around about 2.2%. I'm just gonna manual close it, get out of the position, and understand that yes, I can be content with what I've got, and then move on. But just so we can see, price has gotten close to the 90% rule anyway, so I just manual closed it. Now, would someone say, oh, that's discretion, oh, why did you do that, oh, you're not sticking to your rules, blah blah blah? Because you don't want to risk getting the extra 0.3% just for, and risking 1.5%. Is that an even trade? I would throw that question back and I would ask, is that an even trade? Is that a trade that you'd want to do where you'd want to get another 0.3%? However, you're risking 1.5%. You see how there's negative risk to reward there? So that was my logic behind manual closing there. I eventually got out of the position for around about 4.6%. It did go a bit longer, but regardless, my stop loss was around about here anyway, so I would have probably got tagged out for 2.2% anyway. So yeah, that was the dolly end position. I hope you guys took some good lessons from that. I know it was a shorter video this week, but next week I'll plan another video and we'll do something a bit more interesting, and yeah.